What another great week it was. Everybody's up a little bit, but hey, how's your portfolio doing? Hopefully you're beating the market. So let's find out exactly what's going on here on this special week of Friday after the bell. Greetings, and salutations, my brothers and sisters of the trading world out there. I hope today finds you well. I hope you're enjoying your long weekend. I know I don't exactly enjoy when the market's closed, but hey, it gives you time to really get in there and adjust your portfolio and look at what's going on and make a good plan for next week. So I hope everything treated you well this week. I hope your plans of retiring early are going fantastic. You're doing great. I believe in you. We can all do it, man. If other people are doing it, they're no different than us. But let's talk about what happened this week in the market. It was an absolutely crazy market this week. Though the SPYs ended up about 1%, the IWM, the small guys, ended up about point and a half, maybe, somewhere a percent and a half. QQQs had a little bit of a rally. They're doing a 3%. So it seems like here lately it's getting at 1, 2, 3% each week, each one in their own respect. So the SPY's been getting about 1.5% each week for about a month. So it's going up, but just getting to that 1% has been absolutely a rocky road. If you're a zero DTE trader or you like to trade super short term, you know exactly what I'm talking about. It has been a rock and roll, up and down, going crazy this week. Huge swings. I mean, I am shocked that the IWM could even recover after some of the downswings it had, but it always does, and the market always recovers. It's just we're not always patient enough to let it recover. But it's rough. It's a hard trade. So if you had trouble trading this week, hey, welcome to the club. That's what it's all about. That's trading. But I wanted to just point out to you a certain index that I always use, and I'm more of a Vanguard kind of guy. And one of the first ETFs that I ever got was VUG. And VUG recently split. VUG is a growth ETF. They're much the same, in a lot of respects. This is a large cap growth ETF, VUG. It usually hits somewhere between 50 to 20% a year. Super safe investment, kind of like an overall basket of stocks like the SPY index or the QQQ and all this. This here, you will have your large cap stocks, all the big dogs in the world, your Teslas, your Nvidias, Apples, all these, just on and on and on. You've got a great selection in that, and it just split 6-1, and now it's only trading for $85. Now, I know, and probably that it doesn't matter about what the price of the share is. I mean, whatever dollar amount you have in there, it's going to go up the percentage wise of the dollar amount. I mean, it doesn't matter if it's $10 or $10,000. It's the same percentage. But people like to trade it whenever the stock is lower, whenever the price, some kind of a mental hurdle or something. But it's a great time. If you're one of those people that would rather get in when the price is low, hey, VUG might be something you want to look into. I've had it since the beginning. It's been a very nice stock, and it's a great place to park your money for a little bit of solidity. If you're not trading at this time and you need something to do with your money, hey, why not put it in a VUG or a VOO or the SPYs or anything? They're all kind of the same, whichever one you like. But that you can park your money there. Then when the opportunity comes along, say in 6 months that you're looking, well, then you can pull your money out of there. You made a nice return. You might get 5% or say 6, 8. I mean, who knows with these markets? But VUG, something to look into if you're liking something like that. But let's go talk about SpaceX for just a moment. We talked about SpaceX, and we said there's no way that SpaceX is opening up and going down. I said it's a ridiculous even conversation to have. And you know what? Shockingly, we were right again. Shockingly, SpaceX got in at 135, shot up, and kept shooting up. It hit a high of $230. It's pulled back to somewhere, we're flying around. Where do we have it here? About the $180, $185 range now. But you know what? And people squawked and scoffed at Elon Musk's proposal that if you had shares, you couldn't sell it till at least they were up 30%. How long did that take? A few hours? So people sooner or later are going to take money. They're going to cash in those shares because they offered them to a lot of people. I mean, everybody from the bottom to the top, got in, and justifiably so. What a great opportunity. But if you get in at a super cheap price and your stocks go up 100%, there's a chance you might get out of some shares. So look for a little bit of selling. Look for that little bit of pullback. We're in a 180. I mean, it wouldn't surprise me if he even pulled clear back to 150. Hey, if we had the shares, we'd be taking some cash too. But they're going to hold on to them, and as soon as they sell those shares, I promise you, there's going to be a buyer in there to scoop them up. It is just absolutely absurd to think this company is going anywhere but up. I know there's the evaluations. I know there's all this. So please, spare me all that. It's just logic. It's just the stock market. It doesn't have to be logical. It doesn't have to make sense. It just has to. It's just what happens. So SpaceX is an absolute buy for me at 150. If it gets down to that 150, you maybe even a little close. I'm going to dip in and get some more shares and everything. So that's a SpaceX. The options market opened up, and I kind of expected them to be a little bit wide. A little bit hard to trade. A little bit. Absolutely not. The markets now, the options market are nice and tight. You don't have a big wide bid ask spread. You don't have a lot of slippage going on. You can get in and out. Right now, it's a good opportunity because the monthly is only, like 3 weeks out or a little bit over, but it's a good opportunity to get in and test the waters. And now, SpaceX is going to be not a very margin friendly maybe at this time, or it's expensive. That's the bottom line. But get in there and put on some put credit spreads. Use a defined risk trade. At least get in there and play. You may as well for a little while. And I would bet that you're going to have more than weekly and monthly options coming very soon. I haven't heard anything about that, but my guess is it's going to be like the Teslas and Apples that have more than just a weekly options. You have a little bit more plays, not maybe daily, but maybe every other day or something. So, but just keep an eye on it. SpaceX is doing exactly what we thought it would, from exactly where we thought it would go. So it will go back up there. It'll reclaim that $230 number. I'm not saying it's going to do it next week or anything, but it's a strong stock. Let's just face facts. SpaceX isn't going around going anywhere, and it's not going away. And the more time goes by, the more I believe that SpaceX and Tesla are going to merge. People say that's crazy. It's not going to happen. But if you're Elon Musk, why wouldn't you merge both companies? Make your life easy. Whatever. But anyway, SpaceX doing great. Here's the big thing. Rocket Lab. I like Rocket Labs, but of course, with all the focus on SpaceX, Rocket Lab had a huge dip, like 15%. Now, Rocket Labs, it's got a gold runway in front of it, and I believe that Rocket Labs is going to bounce back. I think minus 14% is absolutely a great dip buying opportunity. I think it's a great opportunity to put on some put credit spreads. I think it's a great opportunity to put on naked puts if you're a high roller. Hey, but none of this is really financial advice. I'm not a financial advisor, and we're just here talking about stocks and strategies. And I'm just, maybe pointing out something that you didn't see. But Rocket Labs dipping is a very nice thing for me. I've got one lonely naked put left in there at a $95 strike. I'm thinking about picking up a little bit more. If it gets below that $100, I'm definitely going to look to get in some kind of a naked put play, because it's going to be down there. You're talking about at least a $20, $30 swing. SpaceX has $40 expected moves. You're talking Rocket Lab's going to have huge expected moves as well, maybe half that. So you can get down kind of low for that put, and there would be nothing wrong with throwing in Rocket Labs if it dipped below 100, just to straight buy the stock. So, that's something great. All those looking good. But let's now talk about our watch list. Let's watch on the watch list, see what we got coming on. We talked about financial. We talked about Goldman Sachs. They've been making money from the very beginning. They haven't had a problem. They get all the great bids, contracts, and everything out, and more power to them. They're Goldman Sachs, man. That's what they do. JP Morgan's also running them. They're close to all-time highs. But the ones we look at, the ones we really like to focus, like the Bank of America's, the SOFIs of the world, even the XLF, which is your ETF full big basket of bank stocks, that's up this week. SoFi's up 7% this week. Even after taking a couple on the chin, they still finished up 7% this week, and we were able to get out of a lot of our puts. What do? Put some more puts back on, and we're also in a strangle. A strangle is a very good trade for SoFi. It sets up very nicely, something you might want to look at. And the Bank of America, it's even up a couple percent. So financials are starting to give. They're starting to give. They're starting to get back up there a little bit, like we said they would. After all this hullabaloo about all these cool stocks, let's go back to the boring ones. So people are starting to go back to the banking stocks. If you like to park your money in somewhere in a little bit of a boring stock while you're waiting on Anthropic or something to come along, VOO, VUG, over here in financials, all those are great. We talked about energy stocks, and we've been talking about energy stocks for a little while, but we said they'd be in a lull, but I knew that they would go back. And as I said on the last video, we need to get back into energy stocks and focus in on them. Sure enough, Fuel Cell, one of our favorite little guys, that used to be little guys, not so little anymore. Fuel Cell had a 38% bounce this week. I couldn't even get the video made quick enough to tell you how fast they were going. Bloom Energy, which is a face-ripping stock to the upside. Good God, don't ever sell naked calls on energy stocks because you can just get slaughtered. But you know, it's going up. Bloom Energy, where are we at? 30% this, and these are this week. And Oklo up 4%. You've got SMR up 18%. Even SMR is up 18% this week. Energy's back in focus. But oddly enough, we've got Enphase, ENPH, Enphase Energy, which is a player, it's a name in the game, but it used to trade very nicely around that $30-$35 region, and maybe in 20, 35, and it just would bounce back and forth in there. And it was a great strangle, great iron condor kind of play. But all of a sudden, boom, it got up there, and it thinks it's a big deal now at 50. So I'm not saying it's an entry point, but it's a breaking point. It's either going to have to go back down to that $35 range where it likes to lay and be comfortable, or it's going to have to break up to the next level. But it's down 6% this week while the midst of everything else is up. So let's keep an eye on Enphase. There might be a play in there, but definitely keep an eye on that fuel cell. If you're brave enough to get into Bloom Energy, by all means. Oklo is a great stock, and I think they have a great future in nuclear. But Oklo is, if you can get it below 60 is where I like to trade it. It's tough to get down in there, especially right now. It's probably not going to happen, so you might have to go up a couple bucks. So that's okay. Now let's talk about quantum. Rigetti, once again, as we said, was going to be our pick for quantum. Rigetti's up 1%. That's perfectly fine because 1%'s up, moving away from the puts that we had. So we were able to close out some of our puts. We were able to put on new puts. Rigetti's traded super nice for us. And in that quantum stock where the government just gave everybody all that money, now we have IBM that took a 10% dip this week. Now that's pretty good because IBM's a big dog and it's not going anywhere, and it just got into the government portfolio, et cetera, et cetera. So a 10% dip, if you like those dips, that could be a big opportunity. Boom, right there for you to get in. The small dogs, I talk about Serve Robotics, I talk about SoundHound. Both those stocks, every week I've said the same thing. I like to play them. They're not yielding tons of cash, but you can just wheel them all kind of crazy ways, and they're still $7. They've been $7 since God talked to Moses, it seems like. So by all means, get in there, play it, hit your $50 pops, boom, 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 boom. I mean, that adds up, man. One drop of water sooner or later overflows the barrel. We've got SoundHound, Serve Robotics, Joby is right hanging out that $9 range. I think it almost hit 10 at the end of the day. Archer still at 550. All four of those plays, they're not really going anywhere fast, but you know what? We can make money off that, and we like that. We don't like it. We like some kind of safe trades. We like some bread and butter in there, ones we don't have to sweat or anything and watch all the time. And let me give you another one. It's kind of put itself back into the watch list, is HIMS. HIMS, I like to trade HIMS. I've taken some lumps on HIMS. I've got some over on HIMS. So it's a back and forth but it's a really good trade. It has a good margin relief. You can get it on naked puts, usually about a 3-to-1 risk to reward, somewhere in that ballpark, maybe less. So HIMS is something good to watch. It's bounced finally off of that $20-ish mark, and now it's hitting up over 30. I think it almost got, or did get to 35 by the end of the day. And that stock used to trade for $70 not that long ago. But it also, in the not so long ago, traded for 15. So that's a huge range. But you know what? Those huge ranges like that are opportunity. Just make sure that you have a good premium in that when you get into it. If it's not 2-to-1 risk to reward, 3-to-1 risk to reward in HIMS, don't worry about it, because it will be. So just put it to the sideline and come back to it. So those are some great stocks. It was a great week. It was an enjoyable trading week, and it's a fun trading week. I know it's a little hard sometimes when you lose, but hey, that's all just part of it. That's all part of the game. And I want to direct you to something that we're really going to drill down on. This is a thing. The next video I'm doing is about data center AI buildouts. It's far too much to put into one video with everything else that we do on Friday after the bell. So what we're going to do is we're going to do a whole video on data center buildouts, and I promise you, this one right here is going to be good. With it, you're going to have all kind of nuts and bolts to it, all kind of different players in it. You're going to have a huge amount of picks and shovels trade in that. So I'm going to start getting on that and getting it prepared for you right after we finish this one. But let's think about everything we just talked about. Rocket Labs being on the dip. Let's talk about the dip in Enphase. Talk about the dip in IBM if you like dips. Everything else, just keep going full steam ahead. Keep making smart trades. Don't get too far over on one side. Make sure your buying power is still staying straight, but you're doing a good job. Keep up the good work. I believe in you. And hey, I thank you for tuning in. Like and subscribe if you would. Don't miss the next video. It's going to really give you a lot of plays to be looking at. So hey, have a great day. Have a better weekend. And I'll see you next time here on Trading in Your Future.